Okay, let's do this. Hi, my name is Richard Lesperance. I go by the name of my man Richard. Welcome to A Better Lifestyle. Today I have the pleasure to have Fuquan Bilal with me. I hope I'm pronouncing your name right.
Yes, you are.
Great. So tell us a little bit about who is Fuquan Bilal in about 2 minutes, and we'll jump right into the topic.
Well, it started way back in 19. No, I'm just joking. So I'm actually a real estate investor. I've been in real estate for about 26 years. I was actually at a conference this week and I'm a part of a mastermind called the Collective Genius. And I was just like, had the opportunity to look back of how far the journey has been for me in the real estate business. So started off in 99 and like everyone else, started off doing rehabs, fixing houses, dilapidated properties, putting them back on the market. I come from a low income area, low income family, so what gave me my feeling of importance is going back to those communities, revitalizing properties, putting them back on the tax rolls, giving residents a better place to live. Got a lot of joy out of that, and I made money, so it was fun. This was back in 1999. Fast forward, been through many market cycles. I've created some great relationships throughout my journey, and really our mission is to provide quality, affordable housing for low income families. And also, we do some luxury spec homes in North Jersey, about 25 to 30 minutes away from New York City.
So I know you've raised throughout your career, you've raised a lot of capital. I think about close to 50 million. So I'd like to know, like, what was the experience like when you started your journey and working? I guess you work with accredited investors. So what was your journey and the experience and everything that you learned?
Yeah, so my experience in the very beginning working with investors was friends and family, right? So I started off with friends and family. Again, people have to get to know, like, and trust you in that order, right? So when I first got started, it was tough because I didn't have a track record, right? And I didn't have the experience. So after a few years of using local lenders or what they call hard money lenders, lenders that charge a lot of interest, and started to build my resume, partner with people till I was able to close a few deals and started to leverage my personal credit and some of my own money. And once I started to build a track record, meaning getting two deals, three deals, five deals, 10 deals, people were seeing that, this is actually happening. Then there was a belief system built and it was faith built because I had went full cycle on a few deals, right? And they were able to see the closing statements to see the money that I was making. And then they became partners, meaning lenders. And it just evolved from there. Most of the business comes from either repeat business or referrals, right? So their friends, they start to tell their friends the things they're into, what they're invested in. Affluent people, the conversations they're having is about investments, stocks, trades they're doing, passive income they're making. These are the types of conversations they're having, whether it's at the country club, Rotary Club, boat club, wherever they are, they're having these conversations about investments and things and networks that they're tied into. So a lot of referral business came, and then it kind of evolved into me just dealing with accredited investors, people who in the U.S. it's someone who, if it's a couple, makes $300,000 or more a year over the last 2 years, they have a net worth of $1 million, not including their primary residence, and they understand investments. They're more of a sophisticated investor. They understand how it works. They understand the risk. So I wanted to raise capital from those type of investors that were experienced on their end as well, because I've gained the experience going through my journey, and I wanted to deal with an experienced investor. It's tough when you're dealing with an investor who's just getting started, who may only have 50,000 or 100,000. That's all they have. So they're more risk alert with risk, and they're not comfortable with certain risks. So when you deal with an investor that's been in the game and that may have lost some money in stocks or lost money on deals, they know how to analyze deals, they know how to ask the right questions, and they know how to find the right operators to get what they want. So that's kind of been my journey, my experience, finding investors that align. First, I have to be in alignment with what they're looking for, and they have to be a fit for what I have to offer.
What would you say is your ratio to success when you talk to these people?
Well, it depends on what you mean with success. So it's really nurturing and building a relationship. So when you're dealing with investors, it's not transactional. It's something, a relationship that you're going to create for a while, right? Because you want to have repeat business. You want them, when you go full cycle in a deal and you pay them back, you want them to loan you the money again so you can continue to use their money. They want you to continue to use their money. They want to continue to grow interest, right? I'm an investor in deals also, and I don't like when I get paid back because I want my money to work for me. I want my money to continue to generate interest because it does nothing sitting in my bank account, right? It doesn't earn that 10% or 9% or 8%, whatever, that I have it out earning when I loan it to somebody. But it's success is for me is if I have a conversation with an investor and I understand what their investment goals are, that's success for me. Whether I can help them or this specific investment I have fit into their portfolio, it may not. I may speak to 10 investors, and may only be two that we have an alignment, right? Some of them are not mission driven. Some of them are yield driven. Some of them just look for high returns. Some don't look for adding value and impact to a low income community. Some don't care about that, which is fine. Some people are just true capitalists. Just I want to make money. I don't care about adding impact to a low income community. That sounds good, but how much returns am I making? Right. So sometimes it's not in alignment with what we're doing and what the investor wants. So for me, success is me really explaining to them how we add value to these communities, what our impact are, the impact that we do. And if it's in alignment with, their investment goals, then, it's a fit. That's success for me.
Yeah, that's what I was referring to. Like when you said if you meet 10%, maybe two of them like is gonna say yes. Because sometimes they say like you have to pitch to 100% to get one person to agree to make a deal with you. So that's what I was referring to.
Well, on that, if you're looking at a ratio on that, is raising capital is a whole nother business, right? It's not a numbers game where you go, I need to speak to 100 people to get 20 investors. It doesn't work like that, right? It's when they're ready, and you never know when they're ready, right? Some people do just communication to learn about your business, and then they'll sit back and watch you for a few years, and they may not be ready. Some people may have money tied up in a deal that's 5 years, but they like what you're doing, so they're watching you and they're going, okay, I like what this person is doing. I've been following them for 3 years. My money is coming back to me in 2 more years, and if they're still have an offering or something available, I'm going to invest with them. Or maybe 1 year term, they may have another investment. So it's not likely that you're going to meet somebody and they're going to invest with you right away, right? And I never go to functions or events or places where these accredited investors are with the mindset of raising capital. It's the mindset of establishing a relationship and explaining to them how we create impact in these communities and how it could be beneficial, to them if they choose to, do business with us, whether it's now or the future or whatever.
So would you say that the accredited investor is already in his mind is already ready for an investment than a regular person?
Oh yeah, that's what they're looking for a way to earn money on the money that they have, right? Especially if they just got paid off from another investment, they're going, how can I put this money back to work?
Okay.
How can I continue to earn interest on this money?
So I guess like you're not doing like the sales pitch. What you're doing, you is building relationship first and then eventually try to work out something in the future, right?
So it's just all education, right? So when I first started, yeah, it was a sales pitch. It was how many people I can get in front of and tell what I do and ask them if they have money to invest. It was that young, hungry mentality. But as I evolved, I recognized, okay, that was transactional. Now I need to go at it where I'm actually adding value and creating relationships. So I'm not looking for someone to invest with me right away. I'm looking to educate the person on what I do and learn a little bit more about what their investment goals are, and then go, okay, here's a product we have. It may be right for you. It may not be right for you. You might not be a fit for us, but let me educate you on how this works. And then there's this series of education, whether it's through webinars, whether it's through emails, uh, and eventually, if this fits in alignment with their portfolio, right? Because some of them have some type of investment theses or things they want to invest into, yields they want to make, and if this is in alignment with that, then more than likely, if they're educated and they understand the investment, they will invest.
So you would tell people, you would suggest people by your experience, you would suggest people to go on that route first, building relationship, then going on the other route of selling like on the sales pitch.
Oh, for sure. As a relationship business, you can imagine how many emails I get on a weekly basis of people just putting a deal in front of my face. Like, here, I have these deals, is paying these returns. Are you interested? I don't even know the person. So why am I going to invest with somebody that one, I don't know? I'm not educated on what they're doing. I don't really know too much about the sponsor. So people are going to invest into the sponsor, the person who's running the deal. More than likely, they will invest in that person than the deal because that's the person who's driving the bus, right? So they want to know that that person have a track record, they're trustworthy, they do what they say they're going to do, they communicate, they're a great educator, they understand their product, and they're really betting on it on the jockey, not the horse, so to speak.
So what do you were talking about networking before when you go to networking events or places, where do you go like if it's offline or online, like where do you go?
So what we want to do is really, if you're in the business of trying to find these accredited investors, more than likely is someone who have a net worth of, you can start from 1 million up, 3 million up. We usually try to look at individuals that have a net worth of at least $3 million, $3 to $5 million there. We call them mom and pop investors. Usually business owners, they have, 15 to 20 employees. So if you look at a business and you say, okay, where can I find these business owners that have about 15 to 20 employees? Maybe they have a franchise store, whether it's a chain of fast food restaurants or whatever it is, right? So those are the busy professionals that you want to make your avatar. It could be doctors, chiropractors, lawyers. These are the people who have that high net worth. And then where are these people? What conferences are they? What events are they going to? And then you will put yourself in that place to be in the room with these individuals to communicate, to network with them, right? And then whether it's here in the U.S., we have events where Chamber of Commerce, where you have political people come out and they have these dinners you sponsor. You can go there. You can go to country clubs, golf clubs. You can go to a variety of different places where these people are, right? And you have like on social media people that's in groups like luxury watches and all this other stuff, boat clubs, yacht clubs. You have all these different places where you would find these individuals and you put yourself there, and you educate and you build relationships, and you don't go there with the expectation of raising money. You go there with the expectation of creating relationships and educating.
So you talked a little bit about, uh, if I remember, what about what the accredited investors is looking for in the deal. What are some main stuff that they look for before investing in a deal?
So, an accredited investor, from my experience, what they look for in a deal, again, is the experience with the operator, sponsor, the person who's running the deal. What's their track record? Have they went full cycle, meaning from start to end? And if they have a few deals like that, whether it's if it's a multifamily project or if it's a single family fix and flip or whatever your business model is, have you went full cycle with a proven concept, right? Where's the case study? How many of these have you done? Have you lost any money? Have you not made investors whole? And if that did happen, what did you do about it? How did you make them whole? How did you communicate? Right? They're looking for transparency because nothing is perfect, right? If you've been in the business for a long time, You're going to have some losses, you're going to have some challenges, and you grow from that. But is how did you stand up against that, and how did you communicate those challenges to the investors, and how did you make it right? Right? They look for that. That's part of experience. They also look at the deal, right? After they look at the sponsor, now they're looking at the deal. Does this deal have enough meat on it? Is the sponsor invested in the deal? Do they have skin in the game? Right? You have a lot of people who's promoting deals, but they don't have any money in it. So if it's such a great deal, why don't you have your money in it? Right? So sponsor investors look at that as well, and they didn't look at the deal. They underwrite the deal. They look at the deal to see if it pans out, if it's profitable, if it's risk adjusted yields. They'll go down a list of things they will look at to see if this is something that they want to invest in. Is the deal in the area where they want to invest? Right? What impact does this deal have to the community? So a variety of different things that an investor will look at, but that's pretty much the basics, right? Is the deal profitable? What's the timeline on it? Is there enough meat on the bone to pay me back and for the sponsor to make money? Is the sponsor invested into the deal? Those things, an investor look at.
So what if someone has no track record but is has done his homework in the field of if it's real estate? Let's say they've done their homework and they want to attract accredited investors, and like I said, they've done their homework and everything, and they're willing to put the work. What would you say to someone like that?
And that would be a true partnership. The first one is always the hardest because, like you said, you don't have a track record. Now you have someone who have to believe in you. That's why I said I started with friends and family. Like they know my character. They know me as a person. They know what I'm capable of and what I'm not capable of. So going back to what I said, the investor ultimately invests in you, right? Is you first and then the deal second, right? So if your characteristics are there and you have that relationship and they know that you're somebody who's going to finish what you started, right? And they know your character, they're going to be investing in you and not the deal, right? So you start off with that first deal, you might have to give up more profit. It may not be a 50-50. It may be a 75-25, where 75% is going to the investor, 25% is going to you, right? You're aligning that risk with compensation. You're saying, hey, I'm educated, I have the resources, this is my first deal, I don't have the capital, I'm willing to give up, seven instead of 50-50, I'm willing to give up 75% of the profit, and I'll take 25% just to allow me to build a track record. You can go that route as well.
What are some mistakes that you made?
I made plenty of mistakes. And somebody asked me that question actually yesterday, which is a common question. If you had to go back to when you first started, what would you do differently? And I always say nothing. I would want to make the same mistakes I made because it makes us who we are today, right? I needed all the pain and challenges and everything I went through because adversity brings growth. So I made mistakes in the past of not being a good communicator, right? Thinking that maybe once every 3 months is good to communicate instead of every month, right? I'm thinking that, okay, as long as the person is getting a payment, I don't need to communicate. That's we kind of get stuck in that. So that's why I said raising capital is a whole nother business because your flipping business or real estate business is one part of it, managing your staff and your team. But the capital raise business is a whole different business because you have to have those investors touches. You have to have constant communication. You have to continue to educate them even after they invest with you. You still want to bring them in on how you're underwriting new deals that you're doing with them, and you still want to do those webinars. You still want to create that community. So those were some of the mistakes that I made because I wasn't knowledgeable about it, as I went along. I think one of the biggest mistakes that I made when it came to raising capital is really, um, I would say, with the digital marketing, finding out about that too a bit too late. There's a lot more leads that are generated on an inbound approach when people are seeing your content online. So I was kind of late to that and sticking with the old ways of going in, shaking hands, kissing babies or whatever they say. Um, the term is meeting people in the flesh. I thought that that was really the only way. But as the digital market is here, that's something that I got onto late. So I would say that's a mistake I made when it came to raising capital. There's several, I can list hundreds of mistakes that I made, but it made me who I am today, you know?
So what are some other like do's and don'ts that people should pay attention to?
Wow. When it comes to raising capital, I would say don't, as I mentioned before, go to an event with the intention of raising capital. Go to the event with the intention on educating people on what you know about in your space. Because if you go to an event and there's a bunch of chiropractors or doctors, they're knowledgeable in that space. So they can speak to you all day about that. You're knowledgeable in whatever business that you have. You can speak to them about that, right? You're going to educate, you're not going to try to persuade them to invest with you. And you have to be transparent about a lot of stuff and be honest. Don't make yourself bigger than what you are, right? So I would definitely say that's some of the don'ts. And the do is just constantly stay educated on your field to build mastery and constantly follow up with those leads that you generate. One of the mistakes that I made is not having good follow up earlier on. I would meet a person and think that if they was interested, they would contact me instead of me, reaching out to them to continue to nurture and build that relationship.
On the legal side, are there certain things that people should pay attention to before they structure a deal?
For sure. So on the legal side, things that people should pay attention to is, the proper way to set up the investment vehicle, whether it's a syndication, whether it's a private placement. You definitely want to get with an attorney, a securities attorney, to make sure that you understand the laws on how you can market, number one, because there's certain structures that you set up where you can't do general solicitation, right? This is why we only raise capital from accredited investors because I can stand in front of a room and say, hey, we're paying 10%. I can market online. Hey, looking for joint ventures, 10, I can do general solicitation if I'm marketing only to accredited investors. So I would definitely say be conscious and educated around that. And a lot of people try to cut corners because they don't want to spend the money that it takes to set up these vehicles. They want to go the easy route. I would definitely suggest retaining an attorney, getting educated on the do's and don'ts when it comes to raising money so you're legally protected and you're doing it the right way.
But in regards to specifically like accredited investors, they have to deal with the securities for that, or
Correct, correct. Well, if you take money from more than two people on a deal, like three people or more, it's in the U.S. as a security. So you want to be mindful of that. A lot of people cut corners and they promote on Facebook and they do all of this stuff. That's not the right way to do it. So you want to make sure you're protecting yourself and also your investors by having a right legal structure set up to be able to raise capital correctly.
what kind of mindset someone has to be before they start going that route?
I would say focus. A lot of people get distracted doing so many different things. So focusing on the desired end state, like what does it look like for you to have this new vehicle set up? What does it look like for the business model? So a lot of people go in and say, well, I got to find a deal first, and then I can raise the capital. Or some people go, I got to raise the capital first and then find a deal. So you have to be juggling at the same time, right? So if you're in the business and you're constantly looking for deals, you have to constantly be creating those relationships and pretty much get soft commitments, which you can meet someone and say, hey, I have some deals coming up. I may need, 100,000, 200,000 to close. Would you be interested in investing on this deal? If so, how much? And you start getting those soft commitments. So when you do land a deal, then you can align the money up with it at the same time. But you have to be focused. You have to be focused and almost relentless, really, to get this thing going.
All right. Any last word you would like to say about the accredited investors?
Yeah, as I mentioned earlier, always go to educate and create relationships and not with the intention of raising capital. and slowly but surely you'll build your network, and investors will have to get to know, like, and trust you.
Any new projects, anything that you're working on?
Yeah, we always have stuff in the pipeline. We actually do a lot of luxury spec homes here in New Jersey, some ground up stuff. And we also do multifamily in the Southeast. And that's part of our impact project where we provide affordable housing to low income families. So we always have projects in the pipeline. We will buy anywhere from 40 units to 150 units in the Macon, Georgia, Birmingham, Alabama area. So those are our investment strategies. We have a hybrid model in our fund. So we have opportunities for investors to invest alongside us and make anywhere from 9 to 12% annual.
Where can people learn more about you and follow you?
Or they can go to our website, nngcapitalfund.com, and they can have the opportunity to set up a discovery call if they want to learn more.